Welcome back to the channel. My name is Patrick, and in today's video I'm going to give you a top-down analysis from a supply and demand outlook. If you find this useful, you know what to do. Hit that like button, hit the subscribe button and support the channel. Let's get busy.
Okay, so before we get started, we need to know what supply is and what demand is. So a simple way of looking at it is supply is where the seller stepped in and sold the market. Okay, so this is a supply zone. They sold the market, so if price comes back up there, I would expect them to try and sell the market again. As you can see, they did. Okay, a demand zone is where price was bought from. So buyers stepped in here, pushed the market up, price higher, right? Price came back to that same zone, it held there and eventually pushed it higher. Okay, so this is visible on the daily, on H4, H1, M5, M1, every single time frame, and we know it as trading with the trend. Okay, but it is really just supply and demand. Okay, so pushes up, pulls back, pushes up, pull back, pushes up. This is what I call a pole and flag. So pole, flag, pole, flag, pole, flag, pole, flag, and that's a trend, right? So pole and flag is just a trend trading strategy. Okay, so that's the way I view it, and it's the easier way for me to remember it. And in line with supply and demand, you can see it just makes sense. This is the best way, the simplest way to read the market. And once you get used to reading this like this, you don't need no indicators. Indicators are just distractions. Indicators are just replications of what we're seeing already, and they're delayed. They're slow. I mean, they're telling you what you've already seen if you know how to read the market. Okay, so coming from someone who used indicators, I used to use all the EMAs, SMAs, MACDs and RSIs. I've tried it all. As a retail trader, you come in new to the game and full of YouTube videos, tutorials telling you that you need these indicators. You know, you try them out and you believe they work. But the truth is, the market doesn't respond to EMAs and moving averages and whatever. Okay, it doesn't respond to them. They are actually responding to supply and demand zones. Okay, so anyway, that's another subject. So this is how I read it. So where we are currently on EU, we had a trend. We had it on the daily. We pushed up, pulled up, flagged down, pulled up, beating this high, meaning now we are now in an uptrend. Before we were in a downtrend, so this is an established uptrend when it beats this high. When it pulls back into this zone that beat that high, that's when I will look for a buyer to push it back up and so on. Okay, this is the situation I would hold a move. So this is what this video is about, when to hold. Okay, as you all know, I like to scalp, and occasionally I may leave a runner. Okay, and if I leave a runner, it will be if I saw this move here. So price beat this high here and it pulled back into this demand, puts in a reversal pattern here. I take my scalp and I will leave a runner to try and run these highs. So imagine if I took a scalp from there, I had entered there, I left the runner, 98 pips for a runner is great, and as you can see, it went a lot further. I could move to break even maybe and get, what was that, I don't even know the numbers, 220 pips. Okay, so that's the situation. I may leave a runner. Okay, so now let's look at what happened on Monday. So the price now has reached where its agenda and it's reversed and it's started to downtrend. Okay, so on Monday I was in a trade and I scalped the move initially and I left a runner. However, the runner got stopped out, and then I'll show you what happened with the rest of it in a second. So let's find Monday first. Okay, so today's Friday, so the beginning of this week. So Friday, Thursday, Wednesday, let's get rid of that. Wednesday, let's try that again. Friday, Thursday, Wednesday, Tuesday, Monday. Okay, So let's just mark it out. I already know what my entry was, but okay, so all right, so this is Monday. Okay, so if you've been watching my videos, you know my setup, and it's visible a few times here. And you know, on Monday I was just scalping the heck out of this. I scalped this down, I scalped this up, and I scalped it there. So I had about 3 scalps trading this range. So on Monday, what I saw was price trended up here, slowed down, and flags up and push down. So pole, flag, pole. So when price returns to that zone, I'm entering there, and my stop loss is above there. Best place to place it. And my risk was roughly 11 pips. Okay, if I held it for 1-to-1, I would have got it down here. That's 2-to-1 down there. And what I wanted to do, I think I mentioned it in Monday's video, what I wanted to do was leave a runner to try and run these equal lows from the previous week. So my entry being up here, I was trying to run these previous lows. Okay, so it's about 60 pips. Why? Because this is all equal lows. This is liquidity. There's a liquidity pool here. People trade the support resistance, looking at this as a resistance zone. As you can see, price came there, held, giving the impression it's a resistance zone. All it did was polled, flagged up, and smashed this zone completely. So that's why I wanted to take price from here, try to run these lows. I do not trade support and resistance, and this is why. So in which occasions do you leave runners? This occasion, when it's in line with what's going on the higher time frame. Okay, I'm going to try to keep this video very simple. So H1 now. So we went D1 and we saw we're on a downtrend. Okay, so polled, flag, polled, flag, polled, flagged. This is where I entered off this flag, respecting this high, puts in a reversal pattern here. Like I said, if I was trying to buy this, I'll look for a reversal pattern here. It put in a reversal pattern here, and I'm trying to run this low to continue the trend. Also, another indication on why I will be selling the market. So if you're scalping, you could use this. If you're swing trading, you could use this. So if you're entering around here and your stop loss is possibly above here or the previous high there, you're trying to take price down to this imbalance here, this area where price has not been since it left. Okay, as you can see, most of the times price pulls up and it pulls back in. Okay, pulls up and pulls back in. For me, that's to give buyers the opportunity to get back into the market, or give sellers the opportunity to enter the market. And that's how supply and demand works. If you apply it to normal goods like foods and commodities like clothes or whatever, you know there needs to be a demand and then a supply, and it works hand in hand. Okay, so price is pushing back down and I expect it to drive into there. Okay, so visible on the daily, H1, same thing, pole, flag, pole, pole, flag, pole, flag, pole. So I expect it now to flag up here, which it's doing, and pole down and take these lows as well. Okay, so this morning I took a trade and I saw my reversal pattern here. So it pushes up, breaks structure, pulls back in here. So let's just zoom in again. So consolidates here, pushes up, giving the impression it's continuous uptrend, breaks structure here, pulls back in, breaks structure again, and then entry could be here, trying to catch this third leg out and potentially run these equal lows. Okay, there's a lot of news today, so price is not moving correctly. It's gonna consolidate maybe and wait for the news. So knowing that, I did not wait for my entry. I did not wait for for it to pull and come back here. I entered there nice and early, and I was out for 6 pips, I think it was. I'll show you trade history. I was out here, so I entered there nice and early and I was out for 6 pips. I left the runner, and as you can see, my runner, I closed it when price had just pulled back up against it. Realizing that what was going on in the market, I knew we could be in for a long period of consolidation, and I was just not interested. Not even with my runners. Okay, so I know I can't hold moves, but if you can, and if you like to leave runners, and you're willing or ready to take some drawdown, because this will happen. My stop loss should be above here, and if it was, I would have been stopped out. And I just haven't got the mental capacity to hold through all this consolidation just to see if my runner gets to its destination. So I'd rather just take my 6 pips, which was 1%, and call it a day. So I made shy of 2% today. So what am I leaving a runner for? So that works for me. For you, if you like holding moves, this is how you read it. Top down analysis, daily, look to see where the trend is, move down to H1 to see if the trend is visible there. Yeah, yes it is here. So you then know that this is an entry point to go counter trend, to go with the trend. Okay, that's an entry point. When it pulls back into that supply zone, it pushes down here, it pulls back up. That's your entry point to swing it back down underneath this low. It gets down here, pulls back up. That's your entry point there. It's just the same thing. I can't complicate this video really. It's just pole, flag, pole, flag, pole, flag, pole, flag. That's on the H1 daily. We've already seen it. M5 is the same thing. M5 here, M15. It's all the same thing. Pole, flag, pole, flag. It's going to continue doing that until it reaches destination. When it starts breaking structure on the daily, that's when you could really be bullish. But other than that, maybe you're just scalping moves. That's what I do. If you're swinging moves, definitely refer to higher time frames, and that's it really. Top down analysis shows you how I use it in line with what's going on the shorter time frames. And because of what's going in line, I know whether I'm in line with the market. If I'm in line with the market and I'm in drawdown, I could hold the move. Give it some space to breathe, and wait for it to go through. If I'm under a low here, we're downtrending, right? If I'm under a low here, I'm here, right? This is a discount for buyers, and I'm in a demand zone. Maybe I should be buying, so I'm looking for a reversal pattern here. Okay, there was a reversal pattern here, by the way. So this is the reversal pattern here when it broke this structure here. So consolidated, pulls down, flags, breaking structure, pulls, holds there, consolidates through the night, and broke structure. So we have now a low, higher low, higher low, higher low, created a higher high for once, higher low being respected, create a high high. So this is a reversal potentially going back up, back to this supply zone, maybe reversal around here, and it pushes it back down to continue its downtrend. We don't know yet, but this is how you could use what's going on the higher time frame to plan your trade. So if we're in this reversal pattern here, we may take it up. We're still in a downtrend, so I wouldn't try to hold it to try to beat this high here. I would hold it to try to get into this zone, and when it starts showing signs of weakness, I will get out. If it puts a reversal pattern around it, I will get out. If I'm here and it puts a reversal pattern, I'm trying to take these lows, okay? Because currently, if it respects this high, it's still within this downtrend based on what's going on the higher time frame. I'm trying to take these lows, continue the downtrend, okay? That's simple, okay? Hope you found value in this. If there's any questions, if I've rambled on a little bit and I've lost track of my thought process and you need some more clarification, hit me up in the comment section. I'll be happy to go through it with you and we'll take it from there. Okay, so hopefully you've appreciated this. This is Patrick, and until next time, peace.